County, the Washington Department of Health, Washington Chapter, AAP, and Within Reach. No matter where your classroom is, whether in person or online, routine vaccinations protect your child from serious diseases like measles, mumps, and chickenpox, and they keep your child safe, healthy, and thriving. Need help finding a provider? Visit parenthelp123.org or call the Help Me Grow Washington hotline at 1-800-322-2588.
Join Rainier Avenue Radio from 5 to midnight for Sunday evening sound sessions. Jazz from the Cabinets from Big Poppy.
That's right. It's time once again for Jazz from the Cabinets with Big Poppy.
Sergio LaCour's Love Lines.
It's Sergio's Love Lines with Sergio LaCour. Go to the phone line. Tell her who we talking to.
Sage Prince and Just My Opinion.
This is Sage. That's just about going to do it for the first half of Just My Opinion.
K-Fox Night Beat with Nasty Nets Rodriguez.
The beat of the Fox. K-Fox Night Beat, Nasty Nets.
You know what? You're going to listen from 5 to midnight. Just turn it on and don't stop. DJ Alibaba. The Underground Surround Sound Start Time with Paul
Thanks for tuning in. My name is Paul Pearson.
Sunday evening sound
Start
sessions on Rainier Avenue Radio. Trust me, you'll be listening the entire time from 5 to midnight. Sunday evening, your sound session on Rainier Avenue Radio.
If you or a family member are 55 or over and need nursing home level care, but want to keep living where you are, check out Providence Elder Place PACE. This program offers healthcare, housing, transportation, and recreational activities. There are no co-pays or deductibles, and it's covered through Medicare and Medicaid. Providence Elder Place PACE works to keep you healthy and in your home. Call 206-320-5325 or visit providence.org Elder Place. Providence.org Elder Place.
You know you can't get enough of Rainier Avenue Radio. .world.
Welcome to Real Estate and Money, a half-hour program. Rainier Avenue Radio.world, designed to help you whether you're a buyer, seller, investor, or renter in real estate. Your hosts are two local professionals who will escort you on your journey. Violeta Strash, who has years of media advertising and marketing experience and brings this extensive knowledge to John L. Scott Real Estate and all our clients. And Tina Lombard, who is a mortgage loan originator with Guaranteed Rate Affinity, with over 28 years of experience. And now here's Violeta and Tina.
Hello.
Hey, hello.
How's everybody today?
I'm good. I'm staying dry.
Oh, yeah.
Look at all the umbrellas behind me. That's what the weather's been like here.
Oh, my goodness. You look great. You look fabulous.
Oh, so do you always, my beautiful friend. Yes.
Oh, my goodness. So you guys, welcome to the show. This is another show of exciting information and non-comparable insight and advice on buying your home here either in Washington State or in Colorado. And I'm your host, Tina Lombard with Guaranteed Rate Affinity. And
I'm Violeta Strash with John L. Scott, Kent North.
Mm-hmm. Yes. Oh, so now tell me really quick before we get started. Today we're going to be talking about insurance, everything insurance, talking about insurance regarding your home and the difference between mortgage insurance, the difference between homeowners insurance, the difference between just regular house insurance. But before we do that, what's the weather like there in Seattle, V?
Well, right now it's really cloudy, and I'm sure it's going to rain. It rains every day now. And I'm not going to take one of these beautiful umbrellas, but I got a couple on my car that I have for days like this. And no more open-toe shoes. Forget that. Anyway, shall I get started with our market update?
That'd be great.
Mm-hmm. All right. Here we go. For King County, everyone. Active listings, we have 187. This is for the last 2 weeks because we had a replay last week. So 2 weeks of inventory. We're looking at 187 for King County. Sold, listen to this, 966 sold. So that's inventory that's been sitting around and leftover inventory, I guess. And so we have a backlog of buyers that are out there claiming the unsold inventory. And the number I gave you before, the 187, that's new listings. So whatever was left over, 966 of those were sold at an average price of $1,085,000. Last year, the average price was $1,040,000, which shows you a 4% increase from year to year. And in King County, days on the market, 2020, 27 days, now we're up to 18 days on the market, 11 days, quicker than last year. And then square footage, if you're planning on rebuilding, remodeling, and just whatever it is you need to do with your home, we're at the dollar per square foot. We were looking at $398 last year. This year, $466 a square foot. That's $68 difference right there. And in Pierce County, in the last 2 weeks, we've had 174 homes go into the market. 574 homes have been sold in the last 2 weeks at an average price of $569,000. Last year, it was $548,000, 4% increase. And as far as days on the market, the end of last year, October, 29 days versus 17 days this year. That's a 12-day difference. And then square footage, the price per square feet was $229 last year. This year, $276. That's $47 a square foot more. And in Snohomish County, 81 homes, new homes listed, 449 homes sold at $755,000 an average price. And last year was $714,000. 6% increase is what we're looking at there. Days on the market, 26. Last year, this year, 15. So that's 11 days difference. And dollar per square foot, $280 last year, $342 this year. And the difference is $62. So we're looking at, if you're going to build something, maybe go to, where's the cheapest place? Maybe Pierce County. That's where I'm in. Anyway, there you have it. Tell us about insurance.
That's pretty easy. But something though, V, is like, when I was coming up in Seattle, everybody wanted to get close to the city. And I grew up, the shores of Rainier Beach. And, it was basically the city. And everybody wanted to stay in the city. When I bought my first house, I didn't want to move out of the city. I didn't want to move out of Rainier Beach, and now things have changed. When you start having kids and you start figuring out the values of homes and the biggest bang for your buck, then going outside the city further away makes a lot more sense. And now with COVID and the way the industry works, everybody can work from home and do things differently. So basically, you can go anywhere. So why not go where you get the most amount of money and you get exactly what you want?
And you know what? I must tell everyone, I've been looking over in Kitsap County, over across the Narrows Bridge, over towards Bremerton, Silverdale, Port Orchard. Been looking over there for a client of mine. And, a lot of people from Seattle, this side of the water, they're moving out there because prices are still really good. We've been looking at 3-bedroom, 2-bathroom homes in the 400 to 500, 400 something to 500 something, low fives. And it's quite affordable over there. And if you're commuting into Seattle, the Southworth Ferry from Bremerton, easy. You can rest on the ferry. You can just, you don't have far to drive from any of those points, Bremerton especially, or Port Orchard. You can get over there. And it'd be like commuting. For me, it'd be like commuting from where I am to Seattle, an hour and a half. You can do that from Kitsap County and have your dream home at a lower price point.
Yeah. What's really nice is if you're unsure what the houses look like, lifestyle of living there, there's some good movies on Netflix that actually show, or some shows on Hulu that actually show life over there. There's a TV show called Sirens And it is, I believe it's Port Orchard, but it just completely exemplifies that area. It is absolutely gorgeous, quiet, beautiful towns, a lot of culture there. There's a Netflix series called Made. I don't know if you've seen it, V. It's very good, but it just shows the beauty of the Northwest.
Wow.
And there's just a lot of different things. Even the movie Twilight. I mean, that really emphasizes that Port Angeles area and how beautiful it is over there. But really, if you can work from home, you want to get away from your family, or be close enough to visit, but far enough that they don't visit you. I mean, that type of thing. It's a beautiful, beautiful area. And I agree with you, V. I mean, start looking at these other examples now because they're not going to be a secret forever.
I saw some waterfront property in the mid 600s. Waterfront. I couldn't believe it.
Okay.
I'm going to have to rethink my thoughts of where I want to move to.
Okay. I'm going to retire up there. I know this for sure. But
you will? Yay!
I'm going to retire up there. Listen, okay.
Okay,
it's true. But so really quick though, our show today, we're going to be talking about insurance. So V as an expert on real estate, I'm the expert on mortgages. But the one question a lot of people have that they ask us about, we can't really say too much about it. But insurance can make or break your mortgage approval. Make or break it.
So how did insurance even get started? What's the history of that? Why?
Well, the thing is with history, I mean, insurance basically, if your house should go through some type of calamity, whether it's an earthquake or fire or something like that, and you burn down to nothing, you've got nothing, absolutely nothing. Well, insurance came into play because, if, there's insurance on your house, if something should happen, then the house is paid for. Now, back in the day, there were no mortgages. You just built your house. If it went down, it went down. But, as people started lending money on houses and so on and so forth, a lot of lenders say, hey, listen, I'll give you money. But if the house burns down, I ain't going to be out of luck. I'm not going to be out of luck. If I give you, whatever, 10 pesos, whatever it is for your house and it burns down, the client says, okay, I have no more value. Well, the lender is stuck on a rut and they have no way no recourse on their money. So lending and banking started where, we won't lend any money unless your house is insured. So should a calamity happen, we get paid. Okay. So the one important thing about mortgages is you cannot opt to not have insurance. So with cars, you can opt to not have insurance, and then get caught, then face dire circumstances. Or if something happens and you don't have enough coverage, your car is totaled and you're out of luck. That's it. Even the car dealerships are out of luck. They can't really enforce it. But with houses, we make sure that you have insurance on the property. And if something should happen, a calamity should happen, a hurricane, a storm, hail damage or something, we want to make sure that our interest is protected. So if we give you $500,000 on a house, we want to make sure if that house gets burnt to the ground, we get our $500,000 back. Okay, basically that's what it is. And it doesn't leave you destitute.
But wait a minute. What if I have a good credit score? So just history of good credit, why do I need insurance?
Well, the thing is, prior to the last recent years, people didn't really care about your insurance. They basically cared about, your habits. Do you get a lot of driving tickets? Do you have a lot of claims on your house? But just recently, they've been pulling credit scores. So a lot of the insurance agents have been pulling credit scores because what happens is if you don't make your mortgage payment, let's say 1 month, 2 months, 3 months, now your insurance has expired. And then a fire hazard, something comes down on your house, and then you try to go to your insurance provider, and they're like, okay, you haven't made a payment in 3 months. We don't know who you are. Then your house is not covered, So nowadays, insurance providers actually do pull your credit. I'm not quite sure how they pay or how they charge you as opposed to what your credit score is. With mortgages, the higher the credit score, the better the rate in most cases. With insurances, I'm not quite sure about that. I think there's other factors that come into play, but they do pull your credit now. You need to also pass a credit scoring component of it to get insurance to make sure you do make your payments. So V, there are different types of insurance that a lot of people, when they do a mortgage, they're like, what are the different types? What are you talking about? I got mortgage insurance. I got homeowners insurance. I got hazard insurance. I got title insurance. What's going on? What's with all this insurance?
Yeah.
So there are different types of insurance, So there's your classic house insurance. People have insurance on their house. So something should happen to their house, there's insurance. Then there's title insurance. You want to make sure that your title is insured so that, you buy a house and 5 years later, the crazy daughter that left her mom, she doesn't come back and say, hey, this house belongs to me, or, if you should transfer title that, the next person actually does have, there's insurance that title is going to be transferred in their name and they can't come back at you. So there's title insurance that you've got to pay for, and lenders will not lend without title insurance. So they usually choose your title insurance person.
So your real estate person should be pulling preliminary title to make sure, before a transaction. So you make sure that person that's selling the home is the legal, homeowner that can transfer that title, sell the house.
Yes. Oh my goodness. Let me put this into perspective. Let's say you have an elderly mother. She owns a house, but she's not all there. She's a little goofy. And a daughter comes along and she tries to sell the house underneath her mom. So her daughter puts the house on the market, and then people start making offers to the daughter. But guess what? When we pull up title, it's like the daughter is not the one that owns the house. She's got no right selling it. So that's where title comes in, and that's what MV is talking about. A lot of the realtors, when you list a property and when you buy a property, they often look at the title to make sure who they're talking to is who they should be talking to. So that's title insurance. That's what helps you with that. Now, there's also mortgage insurance. And mortgage insurance, I know we're at the halfway mark here, but mortgage insurance, we're going to talk a little bit more about after the break. But mortgage insurance is something that you have to put in place in case you should default on your mortgage. The lender can't be out of their money. So right after this break, we're going to come back. We're going to start talking about mortgage insurance.
Okay.
Tune in to Real Estate and Money every Tuesday afternoon from 2:30 to 3 here on Rainier Avenue Radio.world. Join your hosts, Violeta Strash with John L. Scott Kent North and Tina Lombard with Guaranteed Rate Affinity. They'll help you navigate the waters of our volatile real estate market and offer you some guidance on how to make your hard-earned money work to make your dreams come true. Learn about current trends, get tips on financial matters, and have fun, interactive discussions about your home inside and out. That's Real Estate and Money.
Okay, great. Here we are again. Okay. So mortgage insurance. People are like, what is mortgage insurance? Well, if you should default, the lender is taking out insurance on you so that they actually get their interest back or their money back should you default. Okay. So that is mortgage insurance. Now, it's been a law because I believe it was during the Great Depression, people just didn't, there was what is it called? The Great Depression, and people couldn't make their mortgage. So banks lost everything. They lost their interest in people's houses. So it was such a calamity, and it made such an economic effect throughout the United States and the economy that it actually went into law that you cannot buy a house with less than 20% down without having mortgage insurance. So if you put 20% down on your home, you do not have to buy mortgage insurance. If you put less than 20% down on your home, you have to buy mortgage insurance. So, of course, the less money you put down on the house, the more risky the investment is. So that only makes sense. If somebody buys a $600,000 home and they only put 3% down, which is like $18,000, if they should default, if they, the bank actually doesn't have enough room to actually sell the house or recoup their costs or closing costs or what have you, should they have to sell the property again. If you put 20% down, if anything should happen to you and you have to sell the house, what have you, you have enough wiggle room to actually pay off, supposedly or hopefully pay off your mortgage and everything else. So mortgage insurance is very important. Now, there are some banks, there are some loan programs out there where you can buy out mortgage insurance. You can pay an upfront fee just to pay for your insurance. Here, this is my mortgage insurance. I'm going to pay it up front in one lump sum. That way you don't have monthly payments. But mortgage insurance typically is something that is tagged onto your mortgage every month, depending on your credit score, the amount of money you put down, so on and so forth. It is a certain percentage. Let's say you buy a house at $600,000. You only put 10% down. Maybe your mortgage payments per month, MIP is maybe $87, maybe $150 a month. If you do FHA, maybe it's $280 a month. There's a certain factor involved with mortgage insurance, depending on the loan program, your credit score, and your down payment. But mortgage insurance is something you cannot avoid if you put less than 20% down. You're going to have to deal with that.
Okay.
And, most houses out there have mortgage insurance. So it's not a bad thing. It's not a goofy thing. It's actually a very good thing because it allows you to put less than 20% down. Okay. And allows the lender to have some comfort in giving you money when you're only putting 3% down or 5% down or 15% down. It gives the lender comfort in approving your loan. So mortgage insurance is actually a very good thing.
Now, so how do I find that mortgage insurance?
Yes. Mortgage insurance is something that the lender finds for you. We have different companies out there, MIGC, Ascent, different ones out there that we actually go through, and they offer different quotes and different rates. And we've got software programs, depending on your profile, that goes in and gives us the actual best rate and the lock and everything else. So we provided mortgage insurance for you. A lot of times you don't really care who the mortgage insurance is. And one important thing is once you do get to the point of 20% equity or 22% equity, contact your mortgage lender, your servicer, and your mortgage insurance provider to see if you can get your mortgage insurance removed. So in a lot of cases, you can get it removed. If it's an FHA loan, you may not be able to get it removed, but do talk to your lender. They can give you advice on whether you can remove that mortgage insurance later on during the life of the loan. But it's something you cannot avoid. Now, also, if you have a condo, and a lot of people are buying condos up there, they make a very good option. But condos also need insurance. You need insurance on the outside of the condo, the roof, the building, all the different structures. And usually your HOA pays for your master insurance. So they take care of the building. However, you still want to have insurance wall to wall inside your actual condo unit or your living unit, your clothing, everything else. But that's called wall to wall insurance. And we still need insurance for that to make sure that you're covered with that. So that's good. Now, that insurance will be your wall-to-wall insurance and your own house insurance. You are liable for that, or you are responsible for getting that insurance. And that's a very good thing because if you have a good relationship with your current insurance provider for your car or your auto or what have you, or your rental insurance, then you can just call your people up, I've had my same insurance agent forever, maybe 10 years or something like that. When I was in Seattle, I had the same as Geico insurance agent for like 30 years or something ridiculous. So you pick your insurance provider. Okay. And a lot of times I'll have a new couple or first time home buyer and they say, I don't know even where to start. And I'll say, well, who handles your car insurance? And they'll say, oh yeah, Sally down at State Farm. Well, call Sally up, and tell you're buying a house. Or they say, I don't know, Progressive, or something. I tell them call their insurance provider that handles their car or their rental, ask them for them first, and then I can give them a couple of names, or they can ask around, but that's something that they have to give to us. So do you ever get that? Yes. Mm-hmm.
I have a question.
Yes.
I don't, were you done with that? Because I had something separate. I had a question from a listener who wants to know about hazard insurance. What's the difference between your mortgage insurance and can you use your own insurance to cover hazard?
Oh, yes. Okay. So I'm so glad you asked that question because we call it hazard insurance and it's basically homeowners insurance. Oh, it's the same thing. Yeah. But we always like to use these secret terms to confuse people. But hazard insurance, we basically only need like fire and earthquake and major stuff. We don't need solar panel insurance, hail insurance. There's some things we don't need. And if you talk to your insurance provider, they're going to sell you hazard because that's just a hazard, fire, earthquake, hazard. Yeah. They may sell you, different stuff. You got a Rolex, you got all these little bells and whistles. We don't need that. I had a young lady, I have some people that come at me and they have a $500,000 home and they're paying $2,000 or $3,000 a year on insurance. I'm like, hell to the whatever. I'm like, no. Okay. And they shop around and finally they find, maybe it's $1,300 for the year, well, it's because they had all these extra bells and whistles that they don't really need, what I have found in the past, and I'm not an insurance provider, but if you have a Rottweiler, you got a bulldog, you got a pit bull in your house, your insurance is going to be more. Okay. If you don't have fire extinguishers in your house, your insurance is going to be more. If you have security in your house, your insurance is going to be less. If you have smoke alarms and all this other fun stuff, your insurance is going to be less. So remember, if you have hazardous pets in your house that like to bite and chomp, your insurance is going to be higher, and the insurance agent is going to ask you, do you have any pets? What breed?
Okay. Wow.
You say a roly-poly cat, they're like, whatever. But if you say you have this vicious hound dog, they're going to say, oh, okay. And they're going to have to take that into account, because if somebody should come across your property and get hurt by your animal, you're going to be held liable. So it's always good to be very truthful and factual. But if your kid says, I want a puppy, you may want to avoid some of the vicious breeds when it comes to that. Sometimes if a neighborhood has a very high risk of crime or damage or claims, or maybe you're in an area like in Colorado where it's always hailstorming every year, guaranteed hail damage, you are going to pay higher insurance. So a lot of times where you live, maybe the property taxes are very low, the house is it's priced very, very low, but in the wintertime, the snow comes in and you can't get anywhere. Fire trucks can't get to you. There is no, prevention of fire up there. There's nothing. So your insurance is going to be very high. So make sure when you make an offer on a house, and if it's remote or something kind of wacko, that you find out, hey, if I were to buy this house, what's the insurance going to be? Because I tell you one time, if the insurance is really high and you're paying $300 a month on insurance, and your loan officer is only figuring $150, you may not qualify for that house.
Wow.
So we don't care about all this insurance. We just care about hazard. So a lot of times I tell people, he's quoting you $247, your max is $140. And I'll tell the agent, listen, they just need to have fire. Hell, I don't care about all the bells and whistles. We can change that later. Just give me hazard insurance right now, and then we'll go from there.
But if you live in a flood zone, you'd have to get a separate flood insurance, right?
Yes.
If you have a waterfront home, right?
Well, not only that, if you live in an area where it's susceptible to flood. I've had a person before, he lived on top of a hill, but this whole area around him, like this was his house, and this whole area around him, actually, when flood came, everything was cut off. So he had flood insurance.
Oh.
He had to have flood insurance. So usually when you buy a house, and I'm glad we asked that, we automatically do a flood cert to make sure you're not in a flood zone. Because if you're in a flood zone, you may not even be able to buy a house. There are some places south of Olympia where it is flood, north of Chehalis, it is flood zone property. You're not going to, you can buy a houseboat, but you're not going to get insurance because of flooding.
Wow.
Okay. So very good question. If you see some houses and it's priced very well, check to see if they have insurance coverage, or if there's any limitations or blockages with insurance coverage, because that may be an inhibitor.
Yeah. Well, our producer, Daniel Bellis, he's got a cat, Miss Linda. Is she considered a vicious cat, Dee?
I don't know, but if she's a tiger, a lion, or anything like that, maybe.
No, he's saying no. She's a lovely cat, and he.
I'm serious. Yeah. I remember when I had my rental property, we told people you cannot have pets, and we came back 6 months later. They were raising Rottweilers in our backyard in kennels. We were like, get out. Get out. Because our insurance, if we were to claim that, our insurance would have been through the roof. So we had to kick them and their animals out. But something like that, you really want to,
And it's hard to get that dog smell out of the house, right? Mm-hmm. I've shown homes and it's like, oh, I can't stay in here much longer. Yes. It's so bad.
Yeah. You got to be really careful. A lot of people don't realize that. They just get, all these little things that affect insurance, and it may inhibit you from having a house. That little cute dog may inhibit you from getting a house. Get the dog after you get the house. Something like that, but it's really crazy. And your lifestyle and everything else really affects your insurance. But, a lot of people don't realize this, but you do need insurance. You cannot avoid it. And one more thing before we close on the subject. If when you do set up your escrow and you set up your new house, we actually take 12 months worth of insurance payments up front. Oh. So if you should go to some deserted island and decide to never come back, and we can't get a hold of you, we're going to make sure that we start making payments from that reserve that we have. We have 12 months to find you. If for whatever reason your insurance is canceled, we will put our own insurance on that property, and it is a lot more expensive than if you chose yourself.
Wow.
But we cannot have a loan out there without it. So we can superimpose insurance on your mortgage. And if you don't pay our insurance, it ain't gonna be too good. But if you don't get your own insurance, if you don't pay your own insurance, we'll get one for you, and it's not gonna be pretty.
There you go. So take care of that, people. Insurance, and don't get too much insurance, but they'll tell you what you need. Okay, so are we good on insurance for now? We'll have to maybe cover more about it.
That's it. Give us what you need.
Yeah, I've got some announcements. So first of all, can you believe December's tomorrow? And we're on episode 80. Oh my God. It's so fast this year. So anyway, we're broadcasting the 3A state championship game this Saturday at noon. Next week, we'll be doing a Seattle recall election results special on Rainier Avenue Radio on 12/7, the 7th, from 7 to 9 p.m. And then there's a holiday craft fair at the Columbia City Theater on December 11th. And we'll be broadcasting live from there as well. Metro League basketball broadcasts will be starting soon, as well as their season officially has started yesterday. Congratulations to Thunderbolt. Yay, one of our longest running programs. They're reaching 200 episodes this week. So congratulations to Thunderbolt. And I just want to remind everyone, next week, Joey will be here. He'll be joining us. And I don't know what he's going to talk about, but I'm sure it's going to be some fabulous interior design thing.
Yeah, he's always a good time.
Yeah.
Joey's always a good time.
Yes. So let's sign off. Tina, go ahead.
Well, next time, thank you for joining us. And remember, tell your friends and family about us next week. And until then, I'm Tina Lombard.
And I'm Violeta Strash. See you guys next week, and thank you all for joining us.
Estate and Money with your hosts, Violeta Strash and Tina Lombard. For more information, call 206-717-4490. That's 206-717-4490. Go to the Rainier Avenue Radio.world website to find the Real Estate and Money schedule, or tune in to our live show every Tuesday afternoon from 2:30 to 3. We will help you find your dream home.
Bye-bye.